Things to know before buying or leasing a car. Buying or leasing a car can be a big deal, especially with prices being what they are these days. So before you commit to any purchase, here's what you can do to make sure you are protected financially and legally. Carefully consider your budget. It may sound obvious, but if you choose to finance or lease a car, you should carefully consider whether or not you are able to cover the resulting monthly expenses. Saving up first in order to make a larger down payment or trading in your previous car could significantly reduce the monthly costs you'll have to pay. Beware that trading in your old car may not always be the best option though. If you still owe money on that car, for example, it may result in what's called negative equity, which can affect the financing of your new car or the lease agreement. You should always ask and check how a trade-in may affect your new financing or lease agreement. Obtaining a copy of your credit report is always a good idea. You can get a free copy from each of the nationwide reporting agencies every 12 months. If you've already gotten your free copy, then a further one may cost you a small fee. You usually get your credit score after applying for financing or a lease. Sometimes you can also find your credit score on your credit statements. A co-signer may be required if you do not have any credit history at all, or if your credit rating isn't strong. Co-signers take on equal responsibility for any contract that is signed, and the account's payment history will appear on both yours and the co-signer's credit statements. This means that any late payments will affect both of your credit ratings, and if you are unable to pay, then your co-signer will have to make payments. Therefore, make sure that you both know the terms of the contract and can afford it. Different types of financing. There are generally two different types of financing option: direct lending or dealership financing. Direct lending involves borrowing money from a bank, finance company or credit union in order to pay for the car. Then, over a period of time, you repay the loan to the lender for the amount borrowed, plus an agreed finance charge. This option allows you to shop around and compare deals from lenders and ask about their repayment terms. It also means that you can know the terms far in advance, including the annual percentage rate, APR, length of term, and maximum repayment amount. This information could be used to negotiate a better deal at the dealership. Dealership financing involves entering into a similar contract with the dealership. They then typically sell that contract to a bank, finance company or credit union that will service the account and collect your payments. The benefits of dealership financing include convenience, since the car and financing is dealt with in one place, and dealership hours are usually more flexible than banks, etc. The dealer may still be able to offer multiple finance options, including special deals with manufacturer-sponsored, low-rate or incentive programs. You should always check the terms of any contract offered and ensure that you understand what it involves. Financing comparisons. Remember that when you are shopping around for financing deals, you are really shopping for two things: the car itself, and the financing agreement. Factors to consider include the cost of the car itself, the annual percentage rate, APR, which may be negotiable, the length of the credit contract. Contracts which offer a long-term payment option may reduce the amount you pay each month. However, they could have higher rates, and of course you will be paying for longer. So you may need to decide which is more important or relevant to you: the total cost or the amount of time it will take you to pay it off completely. Cars lose value over time, so you could end up paying more than it's actually worth. You should always determine whether a deal you enter is final or subject to change before you accept it. Once you do sign the contract, obtain a copy of the signed papers before leaving the dealer or creditor's office. Dealership financing. Should you apply for dealership financing, it's important to know that most dealerships have a finance and insurance department that can tell you about their various financing options. They will ask you to complete a credit application to obtain a copy of your credit report. In order to get the best possible deal, you should ask them about any manufacturer incentives, rebates, discounts or special prices, and try to negotiate for a lower APR. Your ability to get a better deal will likely hinge on your credit report, but you can negotiate at any time before signing a contract. Leasing. Leasing a car is essentially paying for the right to use it for an agreed time period or number of miles, returning it at the end of the contract unless the agreement offers you the option to buy it after. Monthly payments on a lease tend to be lower than monthly finance payments, but you are still paying for the car's expected depreciation during the lease period, plus a rent charge, taxes, and fees. When leasing a car, you should think about the costs at the beginning, middle and end of the lease, how long you may want the car for, and the terms of the lease, such as any mileage limits. The typical mileage limit per year is 10,000, though of course you can try to negotiate for more. Determine whether you are liable for any damage or if there is any early termination fee. Also, check if you are allowed to move the car out of the state or country. Different rules may apply if you are military personnel. After signing your contract. Upon signing any contract, make sure you get a copy of it with all the signatures filled in before you leave. Know that the creditor still has the right to keep or retake possession of the car until the contract is fully paid off. It's vital that you make your payments on time, or they could repossess the vehicle and your credit will be negatively affected. If you are called back to the dealership because the financing was incomplete or did not go through, review any changes to the contract and consider whether you want to carry on with it. You do not have to continue if nothing has been finalized or if there are any alterations. Be sure to get a copy of any new contract documents though. If you encounter any problems making payments, speak to the creditor as they may be willing to hold off if you can pay soon or agree to change the initial contract. Again, be sure to get this in writing if that's the case to avoid any confusion or potential issues later. If you found this video helpful, don't forget to leave a like and share it with your friends. You can also subscribe to iDispute and turn on notifications. That way, you can stay well informed with our regular information videos and updates. Thanks for watching.